So, imagine just a single quarter, just 3 months.
Yeah, a really tiny window of time.
Right. And in that tiny window, a legacy telecom giant pulls in this staggering 1 billion euro order intake. And that's just from AI and cloud customers alone.
1 billion. I mean, it's wild to even think about.
It really is. Like, how did Nokia, a company so many people still associate with those indestructible brick phones from the early 2000s, become this foundational piece of the global AI puzzle?
Well, it's really the defining question of their current trajectory. To find the answer, we have to bridge that gap between all this abstract AI software hype and, the actual tangible physical infrastructure needed to keep the servers running.
Exactly. So today we're doing a deep dive for you, our internet listening community. We're opening up a really fascinating stack of sources to figure out exactly how they're doing it.
Yeah, we've got some dense material today.
Oh, definitely. We're looking at Nokia's Q1 2026 earnings conference call transcript, specifically the YouTube presentation, along with their official fact sheet, the results PDF, and the slides PDF.
Lots of corporate reading.
Lots of reading. But our mission is to cut through all that corporate jargon, right? We want to break down what Nokia's latest financials actually reveal about these massive underlying shifts in the global tech market.
Yeah, we're basically going to look at the hardware reality of what they are calling the AI supercycle.
But before we jump in, a quick reminder. All the information and analysis we discuss here is just to help everyone better understand the market and is not investment advice. Investing involves risks, so be sure to do your homework before entering the market or consult a professional financial advisor.
Crucial point, honestly. Because, the tech sector moves fast, but the physical infrastructure sector, it moves with just massive amounts of capital.
Right. So let's start with that capital. Because Nokia didn't just stumble into a billion-euro order.
No, absolutely not.
They laid a very specific financial foundation first. Like looking at the Q1 results PDF, their top-line numbers are incredibly solid. Comparable net sales grew 4% year over year.
Which is pretty impressive in this climate.
Right, and that is on a constant currency and portfolio basis, meaning it strips out currency fluctuations and recent acquisitions to give us a look at pure organic growth.
Just the core business.
Exactly. That brings their top line to 4,497 million euros. But what really anchors this story, I think, is their profitability.
Yeah, the margin expansion here is significant. I mean, we're seeing a structural shift in how much money they keep from every single sale.
Okay, let's unpack this for a second. Their comparable gross margin expanded by 320 basis points to 45.5%. And their comparable operating margin increased by 200 basis points to 6.2%.
Those are really big jumps for a hardware company.
They are. And just to clarify those numbers for everyone, a basis point is 1/100%. So a 320 basis point increase means gross margins expanded by 3.2%.
Right.
They're essentially keeping an extra 3.2 cents in pure gross profit on every single dollar they sell, without even having to invent a new product. When you're dealing with billions of euros, that creates just a mountain of free cash flow.
It really does. And as an analyst, you always have to hunt for the mechanism behind a margin jump like that. You don't just, magically improve efficiency by over 3% overnight.
Right. There has to be a reason.
Exactly. And connecting the data points across the earnings call, there are really two separate forces at play here. First, there's a baseline accounting relief.
Okay. What does that mean?
Well, in the first quarter of last year, Nokia's mobile infrastructure division took a 120 million euro hit from a one-time contract settlement.
Oh, wow. So just not having that penalty on the books this year naturally lifts the year-over-year comparison.
Precisely. The baseline was artificially depressed last year, so the bounce back looks a bit exaggerated.
So that's part of it. But what's the second driver?
The second driver is actual organic acceleration in their network infrastructure segment, specifically optical networks. This division just surged by 20%.
20%.
Yeah, and optical networking is a heavily consolidated market with really high barriers to entry, which makes it an incredibly high-margin business.
And nested inside that 20% surge is the absolute standout metric of this entire earnings call.
Yeah.
It's the AI and cloud customer segment.
Oh, yeah. The growth there is staggering.
It is. According to the fact sheet, net sales to AI and cloud customers grew by an astonishing 49%.
49%, just massive.
And these customers now account for 8% of Nokia's total global sales. That represents a huge pivot for a company traditionally structured around selling to, telecom providers like AT&T or Vodafone.
They're essentially acquiring a completely new class of mega customer.
The hyperscalers.
Exactly. But to understand why these hyperscalers, the Amazons, Googles, and Microsofts of the world, are basically backing up the truck for Nokia's optical gear,
Right.
we have to look at how wildly the market forecasts have changed.
And it's changed in just the last few months, right?
Yeah, almost overnight.
Nokia's CEO, Justin Hotard, laid this out during the call, and the sheer velocity of the shifting goalposts is just staggering. Back in November of last year, Nokia projected that the largest hyperscalers would spend around $540 billion in capital expenditure in 2026.
Which, historically speaking, was already an unprecedented amount of infrastructure spending.
Right. But in this Q1 call, they revealed those expectations have already been revised up to over $700 billion.
It's just hard to wrap your head around that number.
It is. That's an increase of $160 billion in projected infrastructure spending added to the forecast in roughly 5 months.
What's truly fascinating here is the underlying structural shift in data that's forcing these hyperscalers to spend that cash. It's not just that, more people are using AI chatbots.
No, the fundamental nature of internet traffic is mutating.
Mutating is a good word for it. Hotard noted that today, AI-driven traffic makes up about 20% of total network traffic. That equates to roughly 80 exabytes per month.
Wait, for context on that scale, an exabyte is a billion gigabytes.
Right.
We're talking about 80 billion gigabytes a month dedicated just to AI workloads.
And right now, the vast majority of that 80 exabytes is what network engineers call human-to-machine traffic.
Like me asking a chatbot to write an email.
Exactly. You type a text prompt into an AI, the server processes it, and it sends a few paragraphs or an image back to your screen. It's asynchronous.
Right.
But the earnings call highlights that we are moving rapidly toward agentic AI and ultimately physical AI.
Okay, let's define those because they get thrown around a lot.
Yeah, please do.
Agentic AI refers to AI agents that don't just answer questions, but autonomously execute multi-step workflows. Like an agent might be told to research this company, build a financial model, and email the results.
Right. It operates continuously in the background.
Exactly. Pinging dozens of other software systems without you intervening at all. And then physical AI takes that a step further.
Yeah, think of millions of autonomous robots or self-driving vehicles or smart city sensors.
Right. Continuously streaming high-definition spatial data back and forth to central servers.
And when that shift happens, the data paradigm flips completely. Machine-to-machine traffic will become the primary driver of all global data.
And machine-to-machine communication doesn't tolerate latency, does it?
Not at all. It requires continuous, massive, synchronous streams of data moving back and forth constantly.
Okay, let's throw out the old information superhighway cliche for a second, because I think it totally fails to capture the physics of what is happening here.
Okay, I like where you're going with this.
If we think of a standard fiber optic cable as a simple water pipe, human-to-machine traffic is like, turning the faucet on and off. The pipe can handle it easily.
Sure.
But moving to agentic and physical AI is like needing to push a Niagara Falls level of water through that exact same pipe constantly without bursting it.
That is a much more accurate way to look at it. The hyperscalers are building these massive new AI data centers, or reservoirs in your analogy.
Right.
But they desperately need Nokia to build the technology that allows those existing pipes to carry exponentially more flow. Because of this machine-to-machine step change, Nokia just massively upgraded its market forecast.
Yeah, they previously estimated their addressable market for AI and cloud would grow at a 16% compound annual growth rate between 2025 and 2028.
And now?
They've bumped that up to a 27% CAGR.
Which naturally forces us to ask, how exactly is Nokia manipulating the physics of these fiber optic cables to handle that kind of flow?
Because they aren't just laying down millions of miles of new glass fiber, right? The innovation is happening at the endpoints.
It's entirely about the technology lighting up the glass, and a critical component of this is Nokia's recent acquisition of a company called Infinera.
Oh yes, the Infinera deal.
During the call, the CFO, Marco Warren, made it very clear that integrating Infinera is paying off much faster than they initially modeled.
Didn't they originally tell investors it would take 3 years to realize 200 million euros in synergies?
They did. But they are tracking significantly ahead of that schedule. And this isn't just about corporate cost cutting. It's really about vertical integration.
Right.
By owning Infinera's technology, Nokia is bringing critical component manufacturing in-house. This gives them better cost control, shields them from third-party supply chain shocks, and radically accelerates their innovation cycles.
And we saw the results of that accelerated cycle at the recent OFC Optical Conference in March.
We really did.
The presentation slides show they announced an entirely new suite of networking gear. Specifically, they unveiled 4 new digital signal processors, or DSPs, which power 13 new solutions.
And they gave them those Great Lakes-themed names, right?
Yeah. Huron, Superior, Pacific, Ontario.
These chips span every possible use case. Like, the Ontario chips are designed for 60-kilometer hops connecting data centers across a single metro area,
Okay.
while the Pacific chips are designed to push data 15,000 kilometers across transoceanic subsea cables.
But I want to push back on this a bit, or at least play devil's advocate for you, the listener. We're talking about lasers shooting through glass. For a cloud provider dropping $10 billion on a new AI data center, why does this specific DSP technology matter so much?
It's a fair question.
Isn't fiber just fiber? You plug in the laser, the light blinks, and the data moves. Why are they handing €1 billion to Nokia for these specific processors?
It really comes down to the underlying mechanics of how a digital signal processor actually works. A DSP is essentially the translator between the digital data, the ones and zeros of the computer, and the analog light waves traveling through the fiber.
Okay.
As light travels through glass, especially at these intense speeds, the signal degrades, the colors smear, the pulses blur together.
So the signal loses its integrity the further it goes.
Precisely. In the past, you'd have to physically place expensive optical amplifiers every few miles to clean up and boost the signal.
Which sounds tedious.
Very. What Nokia's new DSPs do is use incredibly advanced mathematics to pre-compensate for that smearing before the light even leaves the laser.
Oh, wow.
Yeah, they can pack dozens of different wavelengths, different colors of light, onto a single microscopic strand of glass, far more densely than before.
So they're using math to force the light to behave better, which means they can cram way more data into the existing pipe.
Exactly. And that leads to the single most important metric in the entire presentation. The slides highlight that these new DSP innovations reduce total cost of ownership, or TCO, by up to 70% for Nokia's customers.
Wait, a 70% reduction is massive.
It is the deciding factor for hyperscalers. You have to remember that the primary bottleneck for AI data centers right now is not money, it is power and physical space.
Right, electricity is everything.
Exactly. These new DSPs from Nokia push exponentially more data down the same strand of fiber, but they do it using significantly less electricity. And the physical hardware takes up much less rack space in the data center.
Oh.
For a hyperscaler struggling to find enough megawatt capacity just to power their AI processing chips, getting a 70% efficiency gain on their networking gear is the difference between launching a new facility on time or stalling out entirely because the local power grid just can't support them.
So you have a chip that cuts power usage, saves physical space, and handles the relentless flow of machine-to-machine AI traffic. Naturally, every hyperscaler on the planet wants this hardware installed yesterday.
Of course they do.
But building these chips isn't like stamping out plastic toys. With this kind of explosive demand comes the harsh reality of global manufacturing constraints.
Yeah, the outlook they provided is undeniably bullish, but the tension around supply is palpable. Nokia upgraded its full-year 2026 network infrastructure growth assumption to between 12% and 14%.
That's strong.
Very strong. And within that, the optical and IP network segment is expected to grow an astonishing 18% to 20%.
Right.
They are currently tracking above the midpoint of their 2.0 to 2.5 billion euro operating profit target.
But reading through the Q&A portion of the transcript, demand is literally outpacing their physical ability to manufacture the gear.
It really is.
An analyst asked when that €1 billion order intake would actually show up as revenue on the balance sheet. And the CEO dimensioned the broader lead times in the optical space at 12 to 18 months.
Just think about the implications of that. You are a massive tech giant, you order the vital equipment you need for your AI factory today, and you might not get it for a year and a half.
In the AI arms race, 18 months is an absolute eternity.
Completely. Entire generations of AI models become obsolete in that time frame.
It really highlights the severe scale of the physical infrastructure bottleneck.
Yeah.
And to try and clear this, Nokia is having to dramatically hike its own capital expenditures. The CFO noted they're expecting capex of 900 million to €1 billion this year, primarily to expand their own manufacturing capacity.
Right. And a significant piece of that capital is going toward a brand new manufacturing facility in San Jose, California, specifically designed to fabricate indium phosphide components.
Okay, indium phosphide is one of those terms that sounds incredibly niche, but it is the bedrock of this entire operation.
Oh, absolutely.
Most listeners are familiar with silicon. It's what computer processors are made of. But silicon has a massive physical limitation.
Silicon is fantastic for processing electrical logic, but it's fundamentally terrible at generating and detecting light. It's what we call an indirect band gap semiconductor.
Right.
For the ultra-high-speed lasers required in these Nokia DSPs, you need a direct band gap material. That is where indium phosphide comes in. It's uniquely capable of emitting and receiving light at the exact wavelengths needed for long-haul fiber optics.
The problem is, fabricating indium phosphide is a nightmare compared to silicon.
It is notoriously difficult. Ramping up a new semiconductor fabrication plant requires microscopic precision, perfectly clean environments, and incredibly complex, volatile chemical processes.
So the yield rates can be tough.
Yeah, yield rates, which is the percentage of usable chips you get from a single wafer, they can be devastatingly low if the environment isn't perfect.
During the call, an analyst actually flagged this risk, asking if there were dangers associated with ramping up this new San Jose fab later in the year.
Good question, honestly.
Yeah. The CFO assured everyone that integration and planning are tracking better than expected. But successfully bringing that fab online and up to volume production is a critical execution test for Nokia in the second half of 2026.
Because if they stumble with the chemistry or the yield rates there, those 18-month lead times will stretch even further.
Exactly. It's a high-wire act of industrial engineering. But even if Nokia successfully builds this factory and perfects the indium phosphide yields, they still face a massive non-technical hurdle: geopolitics.
Ah, yes. International optics.
This brings us to easily the most fascinating exchange of the Q&A session. An analyst named Oliver from Bank of America pointed out a glaring absence in Nokia's public relations strategy.
I remember this part.
He noted that despite this massive 49% growth in the AI and cloud sector, there is a total lack of public customer announcements with the big American hyperscalers. He directly asked the CEO if U.S. tech giants are hesitant to publicly announce partnerships with Nokia simply because Nokia is a European company.
It was a very pointed question about geopolitical optics and supply chain nationalism.
Now, looking at the CEO's response, we are analyzing this purely neutrally, based entirely on what is in the transcript. We're just looking at how Nokia's leadership is navigating the geopolitical realities of global trade.
Exactly. And Justin Hotard's response was a masterclass in pragmatic, execution-focused leadership. He essentially stated that he does not care about the PR announcement.
Right. He actually invited the analysts to go ask the hyperscalers themselves why they aren't issuing press releases.
Yeah. For Hotard, the priority is not generating flashy headlines or slapping two corporate logos on a press release. His priority is delivering the hardware and helping those customers execute their AI roadmaps.
He essentially said, let the balance sheet do the talking. They just booked €1 billion in orders. The gear is being manufactured and installed in the data centers. A public relations campaign doesn't change the gross margins.
His response perfectly encapsulates the reality of complex global supply chains today. Tech companies are hyper-focused on securing the physical infrastructure they need to survive the AI race.
The PR is secondary.
Completely secondary to the sheer existential need for high-efficiency optical DSPs. If Nokia has the indium phosphide technology that reduces total cost of ownership by 70%, the hyperscalers are going to buy it in massive quantities, regardless of the PR strategy surrounding it.
If we pull all these threads together, we're really looking at three massive structural pillars emerging from this earnings call.
Right, let's recap.
First, Nokia delivered incredibly strong Q1 financials. The 320 basis point jump in gross margins proves they are getting much leaner and highly profitable, heavily driven by the organic 20% surge in their optical networks division and the rapid integration of Infinera.
And second, we are seeing the raw mathematical reality of the AI supercycle taking shape. We're witnessing a historic jump to over $700 billion in hyperscaler capital expenditure.
Just astronomical numbers.
Driven entirely by a fundamental shift in the nature of internet traffic, moving from asynchronous human-to-machine interactions to the relentless, high-bandwidth demands of machine-to-machine agentic and physical AI. The entire physical layer of the internet is being rebuilt to handle this volume, and Nokia's advanced digital signal processors are the mathematical key to fitting that data into the existing fiber optic pipes.
And third, With that explosive technological demand comes the ultimate industrial challenge of execution. Demand is wildly outstripping global supply, leading to crushing 12 to 18-month lead times.
Which forces Nokia to pour up to €1 billion into their own capital expenditures.
Betting heavily on their ability to flawlessly ramp up a highly complex indium phosphide fabrication plant in California. They are completely ignoring the noise of geopolitical public relations in favor of quiet, relentless manufacturing execution.
It's a remarkable portrait of what it actually takes to build the physical foundation of the AI era. And, looking at those 12 to 18-month lead times brings up a final, broader question. We are currently just in the early stages of this supercycle. We're still mostly dealing with text and image generation. If the global supply chains for optical infrastructure are already stretching to 1.5 years just to handle today's workloads, what happens to the physical geography of the internet when physical AI hits true global scale?
That is a staggering thing to consider.
Right. Historically, hyperscalers have built data centers wherever land and electricity were cheapest. But if the ultimate bottleneck is no longer just electricity, but the sheer availability of the ultra-high-speed, indium phosphide optical gear needed to network those data centers together, the calculus changes entirely.
Wow.
Will we see a shift where the next generation of AI factories have to fundamentally relocate? Will they have to build where the highest capacity fiber optic corridors already exist, rather than waiting years for new networking infrastructure to reach cheap rural power? It's a collision of digital ambition and physical reality that the market is really only just beginning to price in.
That is a brilliant question to end on, and it brings us right back to why we dig into these earnings calls in the first place. You can't truly understand the future of software until you follow the physical fiber. Thank you for joining us on this deep dive. Keep questioning the headlines, keep exploring the underlying mechanics, and we will catch you next time as we continue to decode the fascinating realities hidden inside the numbers.